Hey traders, it's John Fortune here with this week's weekly Forex Forecast. Hope everybody's having a fantastic weekend. Last week we did get PCE inflation data out of the US, and as I've been warning, we got a re-acceleration. This is Powell's preferred measure of inflation. And as we start to see inflation picking up once again, not just in the US but in countries around the world, this is leading to support for the dollar and it's pushing it higher. And dollar long plays next week are my favorite opportunity. Okay, so quick look at the economic calendar for the coming week. We do have a bank holiday on the Monday out of the US, so don't be surprised to see markets kind of subdued and not doing too much in the Forex complex next week on Monday. And we pretty much have a clear run at the calendar in terms of short-term trading with non-farm payrolls on Friday. So that's likely to be quite a significant event. However, just bear in mind that for the rest of the week, there's pretty much nothing here in terms of major interest rate decisions or anything we need to plan trades around. So we have a pretty clear run at the markets next week. Okay, so let's have a look at the scorecards for the coming week because we can see some really clear opportunities setting up in this week's scores. And going into next week, the setups in the Forex market are really good. I think next week could be a fantastic week. The only thing with next week is on the Monday, we have a US bank holiday, and on the Friday, we have non-farm payroll. So there is a risk that the markets could be slightly subdued next week overall. However, based on the setups that I see going into next week, I really like the way the Forex markets look. So the first thing to note here is the US dollar, for the first time this year, has moved into not just the positive side of the scorecard, but above 2 in the scorecards. And if you remember, I've been looking for the dollar to bounce and to be a good trade to the long side this year, pretty much all year. But the scorecards have been saying not yet. Don't get overly bullish on the dollar yet because the dollar has been in the bearish side of the scorecards pretty much all year. Then we bottomed, then we moved into the positive side of the scorecards, and now the scorecards being above +2 are telling us you have significant edge being long dollar pairs. Or rather, I should say long the dollar, that might be euro dollar to the downside, pound dollar to the downside. So what I like about this is that we do have clear disparity between the US dollar, the euro, the pound, these kind of more safe haven assets compared to the commodities. But what's also very interesting about this is this shows that the re-acceleration we're looking at in inflation is not from the supply side because we are not seeing now the commodity currencies benefiting from this. This was something I floated in last week's video, and I was looking potentially, as we get this re-acceleration in inflation, are we going to see the commodity currencies start to outperform, especially the G10 pairs or the G10 euro majors? And that hasn't been the case. That was not the case last week. Last week, the data actually showed us no. This is inflation coming from the demand side. The supply side inflation is not picking up as it was previously when we had inflation accelerating in 2021 and into 2022 when we saw commodities rallying, commodity currencies rallying alongside the dollar. No, this time it is purely on the demand side. It's core inflation really, which is the most sticky part of these inflation metrics. And as a result, the clear trade is for a continued sell-off or weakness in the commodity currencies vis-a-vis the more safe haven assets, especially the dollar and also even the European majors over here. So going into next week, the opportunities I'm looking at, the themes that I'm looking to trade are quite clear. First and foremost is the US dollar strength. I do like this above everything else. I'm going to be looking at US dollar yen once again to the upside. That was a great opportunity highlighted in last week's video. Aussie dollar to the downside and also New Zealand dollar to the downside. We'll also look at euro dollar to the downside, but that's because we look at it every single week. But these three here, New Zealand, Aussie and yen versus the dollar, they're my top markets going into next week that we're going to look at. I also like the Swiss franc versus the New Zealand dollar. So we're going to look at New Zealand franc to the downside, Aussie franc to the downside, and also franc yen to the upside. Another market highlighted in last week's video that performed really well. And we're also going to look at the pound. Although I prefer the Swiss franc and the dollar versus these currencies, we're also going to look at the pound, which increased its score and moved to +2 because it's rounding. So essentially these are rounded numbers, of course, but you can see here the pound versus the New Zealand I do like next week to the upside, pound versus Aussie and pound versus yen. And my top two themes are US dollar strength, as I said, but the second, and actually my second favorite theme, is not even franc strength, it's New Zealand weakness. This weakness, this follow through of the sell-off we saw on the interest rate decision last week. That is my second favorite theme, i.e. New Zealand dollar weakness after US dollar strength going into next week. Okay, so let's have a look at the individual currencies here before moving on to the markets themselves and the best setups that I see in the markets next week. Starting with the dollar, we did have quite significant price action last week. Why? Because we closed now not only back above the 2-year breakout, but also above the 7-year breakout. So technically, this close was quite strong and it was back above the major breakout levels that we saw previously. And in the bigger picture, this is essentially a pullback to these major breakout levels, a little bit of volatility, and this is actually setting up for a rally. Now, how high we come, and I do think, and I've been saying to you for a while, that we are very possibly coming back up to the highs, maybe on a flight to safety if we have a recession, a global recession later this year, which, by the way, we have now seen Germany, one of the first countries to actually fall into recession, although the US is not quite there yet. And so I do see that flight to safety, maybe towards the later end of the year, if something starts to break in the markets and we could have a rally back up to the highs. But for the time being, we don't have to concern ourselves with how high this can go. The next port of call is this previous high over here. And that is where a decision will be made technically as to whether we break higher with a major double bottom or if we fail up here, and that would start the next leg down. Now, what does the macro backdrop support? It is more supportive overall of further advances in the dollar, not a failure and a sell-off. Why? Because there is no cutting of interest rates by the Federal Reserve or even any other central bank, with inflation not just high but re-accelerating. And again, not just in the US but globally. So everything is supportive of more restrictive monetary policy, not further declines in the dollar. And you might say, well, when is the Fed going to cut? Well, if something breaks in the markets. So if something breaks in the markets, yes, the Fed will cut. And yes, this will drive the dollar lower. But you're missing a very important step here, which is that there would be a flight to safety first and a spike in the dollar before that happens. So I do like the dollar further upside. We are starting to see this materialize. And I do think any trades in the dollar are high probability in the sense that we're coming up to the previous high as the next port of call. And so this move here is where we'll be looking to get paid in the dollar pairs. Next is the euro. And again, I'm looking at these on the weekly chart just to have an assessment of the bigger picture view here. We are selling off in the euro. We're coming back to test the major breakout level, which is this low right here. And again, the next port of call really technically is this low down here. And if we break this low, we'll probably bounce here and come back and retest it. But that is a major confirmed double top. And in the weekly, even if we bounce a bit higher, that does actually set us up for a sell-off back down to the lows. And this is the move that I've been discussing with you guys is, in my opinion, likely to materialize, this year, later on in the year, especially if we get a recession. And again, with Germany falling into recession, this is supportive of a lower euro and a lower euro dollar. Why? Because if Germany, one of the biggest EU economies, is slipping into recession, whilst the US is actually hanging in there, it does suggest that the ECB is going to have to blink first, is going to have to loosen monetary policy because something will most likely break in the EU before the US. And therefore, that would see further declines in the euro on a relative basis to the dollar. Next is the pound. I have been highlighting all the way as we've been testing this. Yes, we've been trading the pound to the upside because that's what the scorecard data was telling us to do near term, and that did work nicely for a long period of time. However, I was highlighting I expect this to fail, and we've started to fail. And as we sell off, again, back down to these lows first and foremost, and that would be potentially setting up a head and shoulders reversal, unlike the other markets where we have kind of a double top. I do like the pound to the downside technically, but Forex is a relative game. And although the pound is also looking like it's going to sell off, so I would be short pound dollar, for example, I don't think it's a great opportunity because I would much rather be short some of these commodity currencies. We're going to look at these versus the dollar than say the pound or even the euro, to be honest with you. Next is the Swiss franc. Ever since we broke out of this major double bottom, I did say to you one of my favorite trades this year was going to be Swiss franc longs into the 117 area, which I've been looking for, and I tweeted out at the beginning of the year. We have corrected, but you can see in the weekly, this is just a pullback, and in fact, it's a stair step. And I do think next week we're going to see the Swiss franc start to bounce again. And this is why I do like Swiss franc long plays as one of the best opportunities next week. That and the fact, of course, that it is highlighted in the scorecards as being something we should look to be long on a relative basis. Next is the yen. Now, ever since we had the failure of the BOJ, I say failure, it's not necessarily a failure, but they didn't come out and adjust their yield curve control as everybody was expecting, and that was the green light to get involved in yen shorts, and we've been looking at yen shorts pretty much ever since, and they have paid very nicely if you've been involved in shorting the yen. Going into next week, I do think yen is still one of the best currencies to the downside, and I do think there's a high chance we come down, take out these lows. So I'm looking to be short yen really on any pullback, especially into these lows and possibly even lower. Next is the CAD. The CAD is overall kind of neutral. It's just choppy and consolidating, and we're seeing this in crude oil as well, just kind of choppy and sideways. So on balance, I don't really have a strong bias on this. In the scorecards, it's +1. So out of all the commodity currencies, you know, this is probably going to perform the best over the next 1 to 4 weeks. That's what the scorecards are suggesting. However, going into next week, you know, I would still prefer to be long US dollar CAD, for example, maybe short CAD franc. I just don't think it's the best opportunity. I would much rather be short New Zealand versus the dollar, short Aussie versus the dollar, and short the yen versus the dollar, and also, you know, short New Zealand versus the franc, Aussie versus the franc, and the yen versus the franc. So kind of neutral on the Canadian dollar, but I am looking for it to come down to the previous lows and potentially lower in the near term, you know, over the back end of this year. Whether it chops a bit higher first and then does it is hard to say. That's why it's off the table for me as one of the best opportunities next week. Next is Aussie dollar, and these two markets here are one of the main reasons I'm looking at this on the weekly chart, because I want you to see there is nothing but air. Now we've broken down here and we've been anticipating this. I've been telling you. In fact, I was telling you guys when we tagged this high that I do expect the Aussie to roll over, same with the New Zealand, and back down to the lows over the course of this year. And you can see with this candle last week, for the first time technically, we've got this strong breakout of this consolidation pattern, which has pretty much been going on since almost the beginning of the year. So what I like about this is now setting up next week. Any pullback in the Aussie is an opportunity to start to look down towards the prior low, because there's nothing but air between this breakout and the previous low. So Aussie shorts are absolutely, especially down to the low and possibly lower, these are on my radar as some of the best shorts heading into next week. Next week is the week to start to look for pullbacks in the Aussie for further declines. And finally, we have New Zealand dollar, and we're seeing exactly the same. I highlighted this as a double top reversal followed by a consolidation pattern. It's got ABC. And now with the interest rate decision, we've got the major breakout below the low. Any pullback in the New Zealand next week absolutely is your opportunity, in my opinion, to start to look for shorts. And I do think, as I've been saying to you all year, and again, as we were testing these highs, I said to you, yes, we've got strength, but I do think we're coming back down to the lows over the course of this year. Many people thought I was probably a bit crazy saying that, but as you can see now, it's certainly looking likely we're coming back down to these lows pretty much for the first time all year. So I really, really like Aussie and New Zealand setups for shorts next week. Keep your eye on those, because we could be seeing some sharper sell-offs, because again, there's really nothing but air between this breakout and the prior low now in the bigger picture. So those are my two top shorts, not just for next week, but they're likely to be top shorts over the next few months. Okay, so let's have a look at the markets themselves, starting with crude oil. And crude oil is, I mean, I cover this every week. It's not one of my favorite markets. It hasn't been for a while. I've said to you, I'm actually quite neutral on crude oil. In fact, I'm very neutral on crude oil. I don't have a strong bias one way or the other. On balance, I prefer shorts, and I've been giving you these two areas here to look for potential shorts. So the first thing I'm going to be looking at, you can see we're kind of still trending to the upside. If we break down in crude oil, I would be looking for a pullback and a potential short down into the area of the 6,900. But you can also look for a potential sell-off at this resistance area. If we come up, and you can see sitting right in here is this high. If we come up this week and we test this high, this would be an area you could look for a short-term trade in crude oil as well to the downside. So two potential shorting areas here and also here, but I think there are better markets to trade next week than crude oil. Okay, so the first Forex pair we're going to look at is New Zealand dollar. This is my favorite market heading into next week. Why? Because New Zealand shorts and US dollar longs are my two top themes. So New Zealand dollar to the downside is absolutely my favorite Forex pair. We did trade into the target highlighted last week, but that was an interest rate decision trade. So I was saying wait till after to look to get involved. So this was quite steep. Maybe this was difficult to get involved with afterwards. But you can see how far we broke through here. This is indicative of further declines of momentum. And so we want to be on that side this week. So any pullback in this market, and it does look like it's going to need to pull back after such a steep sell-off, any pullback is the opportunity to look for a correction, a breakout, down towards 0.59600. My second favorite market next week is Aussie dollar for the reasons we've discussed, and you can see a really nice breakout with momentum below this low. So any pullback, an attempt, or maybe we do come back and retest it, but any pullback is viewed as an opportunity to short Aussie dollar at a better price down to the 0.64200. Next is US dollar yen. We traded right into the max profit taking area. This is where I highlight these areas to say, yes, we can go past here, but once you trade into these areas, you run the risk of a reversal. So these are max profit taking areas. So if you're long last week, this is where you should be looking at booking profits. We traded right into this area, and this was pretty much where we finished the week, only just past it. Coming into this week, any pullback in US dollar yen, this is my third favorite dollar pair, and this is going to be viewed simply as an opportunity to get involved at a better price. And if we start to break out, I'm going to be looking up towards the 142 area. And the final dollar pair is euro dollar. Now, euro dollar is not highlighted in gold because the euro is in the positive side of the scorecard. So I would actually even look towards euro New Zealand, euro Aussie, euro yen. You could look at those. So I do like euro dollar for further declines, but I'd much rather be long the dollar versus these three currencies here. Last week, we traded right into the max profit taking zone, and you can see that was absolutely the move in euro dollar last week. We tagged it and we bounced. So coming into this week, although I prefer these markets, any pullback in euro dollar would simply be viewed as an opportunity to short this at a better price. And if we can start to break out, I'm going to be looking down towards the 1.06250 area. Next is New Zealand franc, a big sell-off from the interest rate decision, and we've yet to really pull back. So I'd like to see this pull back. Perhaps we pull back and retest the low over here. That would be great to start to look for shorts in this market next week. I'm going to be looking for bearish setups down towards 0.5400. Next is Aussie franc, and this is my fifth favorite market heading into next week. We've broken out of this consolidation pattern here, and now any pullback in this market, this is the momentum, this is the trend to the downside. Any pullback is viewed as the opportunity to get short down to the 0.58200 area. And the final franc pair is franc yen. This was a market highlighted to the upside last week, and we traded right into the zone for the max profit taking area. So if you're long, this was a fantastic opportunity last week, intra-week. Coming up this week, any pullback in this market and perhaps a stair step back to the previous high, we may even come back and test this high over here. Any pullback is simply viewed as a bull flag and an opportunity to buy into this at a better price. We start to reverse. I'm going to be looking up towards the 157.50 area. Okay, so those are my 6 favorite markets headed into next week. You can also look at euro dollar shorts, but just beware, euro dollar shorts are not as good as these, in my opinion, next week. The final pairs we're going to look at are the 3 short currencies that I'm looking at next week: New Zealand, Aussie, and yen vis-a-vis the pound, which is also scoring +2 and in the bullish side of the scorecards. Not highlighted in gold because I do prefer these 6, but these are definitely opportunities you can look at next week. So any pullback in pound New Zealand, and again, like all the New Zealand pairs, it does look like it needs a pullback because this is very, very steep and there's no correction here. This is the opportunity to start to look for longs and to get involved at a better price up towards the 2.0650 area. Next is pound Aussie. Again, you can see we've broken out of this. It was struggling over here. We've broken out of this consolidation now. And with this momentum, any pullback in this area is viewed as an opportunity for a continuation up towards the 1.9150 area. And last but not least, we have pound yen. Also breaking out of a tight consolidation pattern here. We're starting to get momentum coming in. So any continuation and pullback is viewed next week as a potential opportunity to look for longs into the 1.7650 area. Okay, so wrapping up the video with gold, silver, and Bitcoin. Starting with the gold-silver ratio, you can see 1, 2, 3, 4, 5. Looks like we're just going to pull back and consolidate. So I don't really have any very strong bias between gold and silver. I think with the dollar moving into +2, or that real edge side of the scorecard, bullish edge, for the first time this year, that is making both silver and gold attractive shorts, especially heading into next week. So the first market here we're looking at is gold, and we did top out at the 207.5021. I did highlight at the time I thought this could very well be the high in gold. I was anticipating maybe it could come up and test the high one more time, but I did think this was going to cap the high in gold. Why? Because we were seeing the dollar also reversing. So going into next week, a strong dollar is a headwind for gold. Any pullback is simply viewed as it currently stands as an opportunity to look for bearish setups into the 1900 area. Next is silver, highlighted as an opportunity to look for shorts last week. We came into the max profit taking zone, pushed past it, and then bounced. So this was a really nice short to the downside in terms of intra-week trading last week. Coming into this week, we've already started to correct, so any continued consolidation or correction in this market is viewed simply as an opportunity to look for shorts once again, down to the 2240 area. And last but not least, we have Bitcoin. Bitcoin has just been moving sideways, very, very choppy, and it's not one of my favorite markets. I am looking to be short overall, but I much prefer gold and silver to the downside, and especially these 6 next week as well. So any pullback in Bitcoin, you can see we've actually broken through the prior low over here. Looks like this is the end of this consolidation. Any continued pullback is simply viewed as an opportunity to look for shorts down to the 25200 area. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment, where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.